It's that time of the year again, tax filing season. But hold on, before you sigh and reach for your calculator, there is something you should know. This year, it's not business as usual. The Income Tax Department has rolled out some big changes to the ITR forms for financial year 24-25. And whether you're salaried, investing in stocks, or running a business, this affects you. So let's break down the 10 key updates you absolutely need to know before filing your return. First up, good news for small investors. You can now file ITR using ITR 1 or ITR 4 even if you have earned long-term capital gains up to Rs 1.2 lakh from listed shares or equity mutual funds, as long as you don't have capital losses to carry forward. This means no more shifting to complicated forms unnecessarily. Next, if you're still waiting on your Aadhaar, listen carefully. The Aadhaar enrollment ID is no longer accepted. You need your actual Aadhaar number ready before filing, so plan accordingly. For business owners, opting out of the new tax regime has clearer rules. Now, you must declare if you filed Form 10 IEA earlier and whether you plan to continue opting out. Salaried individuals still have the flexibility to switch tax regimes every year. If you're claiming TDS credit, you have to mention the exact section under which TDS was deducted, especially for income other than salary. This helps avoid mismatches with the tax department's records. Claiming deductions under Section 80C, 80D or 80GG, the new ITR utility now has a drop-down menus to make selections easier. Plus, it requires detailed section-wise breakups for each claim. More clarity, less confusion. If you're claiming disability deductions under 80DD or 80U, now you need to enter the acknowledgement number of your disability certificate along with Form 10IA, especially for ITR 2 or ITR 3 filers. Capital gains tax rules have changed too. For gains before July 23, 2024, old rates still apply. 15% for short term and 10 or 20% for long term. But for gains after that date, a 12.5% tax on long term gains apply with no indexation benefit. So timing your asset sales could affect your tax. Unlisted bonds and debentures are now treated differently. From July 23, 2024, all gains from these, regardless of holding period, will be taxed as short term at your income slab rate. Before that date, the old 20% tax with indexation benefit still applies. Also, starting October 1, 2024, any amount you get from buyback of shares by domestic listed companies will be treated as dividend income. You won't report capital gains and the cost becomes a capital loss you can set off against other gains for the next 8 years. Lastly, there's relief for many taxpayers. If your gross total income is under Rs 1 crore, you don't need to file Schedule AL for assets and liabilities disclosure. Earlier, this exemption was only for incomes under Rs 50 lakhs. So whichever ITR you file as per eligibility, it's key to be aware of these changes so you can file correctly and avoid any hassles. Stay informed, plan ahead and make your tax filing smooth this year. That's all for now. Happy filing!